Hi everybody, Lance Browning, Income Solutions Wealth Management in Tyler. Hope you're having a good start to the year. We do realize it's a little early to do a halftime report. That's not what this is. But we did want to go ahead and give you what was our economic and market forecast, at least early on, for 2021. Well, for starters, we've raised our year-end S&P 500 price target to 4,100 points from 3,900 points due to our increasingly optimistic expectations for U.S. economic growth and corporate profits. Prospects for additional fiscal stimulus, recent progress in reducing COVID-19 cases, and ramping up of vaccine distribution underpin our increased optimism. More economic growth potential in our view and a surprisingly strong fourth quarter earnings season have led us to increase our forecast for S&P 500 earnings per share in 2021 to $170 from $165. A strong earnings rebound may enable stocks to grow into somewhat elevated valuations. Our S&P 500 target is based on price to earnings multiple, or PE, of 21, and our still preliminary but raised 2022 earnings forecast of $195 per share. There is no change to our 10-year Treasury yield forecast range for 2021 of 1.25% to 1.75%. Our equities recommendation remains overweight. We continue to favor stocks over bonds based on our expectations for strong economic and earnings recovery in 2021, supported by prospects for, again, additional fiscal stimulus, continued progress in combating COVID-19, and the likely continuation of the low interest rate environment. Key near-term risks include potential delays in the COVID-19 vaccine rollout and possible mutant or variant viruses, potential tax increases, although those are unlikely until 2022, and tougher regulations under a Democrat-controlled Congress. We expect solid economic growth across Asia to support continued outperformance by stocks in emerging markets. Emerging markets may garner additional support from potential easing of U.S.-China trade tensions with the new administration, although ongoing geopolitical and regulatory threats may lead to bouts of volatility. We get questions all the time about gold and silver, oil and gas. Our precious metals view is neutral. Our December downgrade of this asset class was driven primarily by our technical analysis work that suggested less potential upside in the near term. The attractiveness of precious metals is further reduced by improving economic outlook and rising interest rates, although the potential for additional U.S. dollar weakness may help attract some interest in the gold commodity and support the price. Our crude oil outlook is positive primarily due to improving signals from our technical analysis work. At the same time, the global demand outlook has improved recently as the end of the pandemic comes into view, and higher oil prices have increased the amount of profitable available production. Our concerns remain the U.S. supply overhang that may limit further upside potential for prices, the potential for more production internationally as prices rise, and the likely slow recovery in travel-related demand, particularly in air travel. Once again, this is Lance Browning, Income Solutions in Tyler. Thank you for listening.